The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Well, we just had a supply-demand report, I believe, that just came out at the Chicago Board of Trade, and we will have our good friend Rich Anderson from Anderson Capital Management on as our guest at the half hour to discuss it. I put the chart of December corn into Tiger TV because we've had the market making a series of lower lows with the butterfly pattern coming in at this $5.95 per bushel level. We had a very nice rally of about $1,500, and now we're having a little bit of a back off today because it seems like the report would be a little bit negative. But Rich will tell us more about that when he comes on. I think the main thing that we, this is the commodity hour, and that's where we want to spend most of our time. But commodities run on money, and what happened yesterday was one of the larger outlier events that I've seen in the past few years, and that was the move that we had in the euro. Most of you folks that are, listening to Tiger TV, maybe you don't follow the Forex as closely as some of us do, but we had a move of over $8,000 yesterday in the euro. That's just unprecedented, folks. I have never seen one that big. We went from 127 and change to 132.55, almost $6,000 up, and then $2,000 down. That's an $8,000, well, it's almost $10,000 move in the whole thing. I mean, it's just amazing. And if you looked at the little swings in between, it was absolutely incredible. It kept me up most of the night because the swings were they were so impeccable as far as hitting the Fibonacci numbers that we like to use. But this was a huge move. We stopped almost exactly at the 61% retracement off the high we made back on June the 20th. And so this market is still in a downtrend, at least so far. But with this move that we had yesterday, and it was coming from a very oversold condition, so that was not not much of a surprise under any circumstance. But it certainly was something that is very, very important in my opinion. I wanted to share something with you on that note. And that is the, if you'll give me 1 second here, I'm sure I saved this. Maybe I didn't. Doggone it. Just never trust an Italian when he's trying to do two things, and especially when it's related to computers. No, I didn't, so I won't be able to. Share that. But I'll try to find it for tomorrow. For Monday's show, and we'll take a look at it then. But anyway, the moves that we had in the euro were spectacular. The move that we had in the British pound was about one half of spectacular of the other one, but it was still pretty crazy because it moved over 400 pips at one time. Now, the one that we shared yesterday during the show was the fact that we were looking for Treasury bonds because we think that major bottom that we hit back at the 132 level was good, and we were looking for a sell-off to come in the Treasury bonds down to the 61% retracement of the move that we had from July the 7th, and that's exactly what it hit yesterday. But different than the currencies and different than the stock indices, the Treasury bonds went down there and stayed there for 2 hours. Even during the time when Bernanke was speaking, the Treasury bonds stayed at the area of that 132.24 area. And from there, they had a $2,000 move straight up as he started to get more into his speech of what he was doing. Now, one thing that you folks have to remember now is this is his last term. There's no question about it. Obama said he didn't want him back, and I don't think Bernanke wants to stay around if he's not wanted. And I'm sure he already has his job lined up. I don't know which Wall Street firm it's going to be. It'll either be J.P. Morgan or Goldman Sachs, would be my guess. But he's not going to go back into academia to be a college professor because he's too high profile. And frankly, I don't think they can afford to pay him what Wall Street can. And he's probably lining his ducks up right now of what's going to happen. I frankly wouldn't want his job because someone just said it could be Larry Summers. I'm going to move back to Hong Kong if we get Larry Summers as a Fed chairman because, I'm not a big fan of Larry Summers. So I watched that movie Too Big to Fail, and when I saw some of the things that these college professors do, it's really quite amazing. However, here's what we have going on in the Treasury bonds at the current time. We've been, over the last 5 days, we've been watching this bottom form. We have a Gartley pattern coming in at the 133.16 level very shortly. We're only about 6 ticks away. So that would be what we would call a low-risk trading opportunity because we have the higher bottoms, the one from the 7th, the one from the 10th, and now the one on the 11th. So that would be a situation where you would have a relatively low-risk entry, into the market. But the bonds were very, very active yesterday. But I think what we really would like to do, and this was the one that really was my favorite yesterday without a doubt, and that was the gold market. And we spent some time with that because of the fact that we had made that 382 retracement. If you'll give me a second here to get this chart lined up so that I can see it clearly. We've had such a big move here last night that it really hold. I've got to get it all here together. Boy, it's hard to do everything at once here when you're trying to get it hooked up. Oh, shucks. Give me a second here. That'll do it, I believe. Okay, this should take care of it. We're going to post a it's a 15-minute. Let's just do it an hourly, and I think we can see it. There we go. This is the one I want to do. I want to show the hourly chart here on the gold because it does the job of what we want to look at. We believe that the 1170 area down there that happened on the 27th of June is the 61% on the weekly. We went up for a week. We came back down to a perfect 61% retracement. And then last night we went right up to within $1 of the 50% retracement off of the high we made way back in early June. And that was a beautiful ABCD pattern. And so far that has been the high, and the market's backed off almost $20 in the last few hours, and it appears to me that we're going to go back and test the 1232 level one more time, with the gold market, because it's still is still bullish, but it goes up and down just like everything does, and we want to be able to try to take advantage of the move to the downside, and that's why we looked at the short side of the position right now. Now I wanted to bring out the price of silver, because silver, we've been watching it quite a bit, and silver had a really interesting phenomenon happen that we see quite often, is that after the Gartley formed down at the $19 per ounce level, the CD extension of we have the AB went up, of course, just a little over $1 an ounce. Then we backed off to a 61% retracement, and then we made an expansion of the CD leg. In other words, the AB leg was 1, and the CD leg was 1.618 to the exact penny. And since that time, silver's backed off about 35 cents, but it's still relatively early in the day. Silver has finally started to move in tandem with gold. It played catch up, yesterday when the Fed was in here, whatever they said. I don't know exactly what they said, but it was enough to make the markets go totally bonkers. And that's the way that it moves. That's the way that it moves. You can't do anything about it. You just literally have to go with it. So I'm going to get to the stocks at the break, but right before the break, because we have Rich coming on at that time. But I wanted to be able to cover a few of these commodities that I think have had some major things happen. We had a situation in crude oil last night. That I posted the 15-minute chart of crude oil. Now, the reason why I've gone down to the 15-minute is because these markets are moving so rapidly that you have to be able to get your risk down to acceptable levels. And $1 a barrel in crude oil is pretty acceptable. That's $1,000. And when you're looking at a contract that's $104,000, that's certainly an acceptable risk. Well, we made a perfect 3-drive to a top pattern in the crude oil last night around midnight, and that was around 3 o'clock in the morning New York time. And since that time, we've dropped $3 a barrel. We're back into that resistance level that we've had for quite a while. But this is the biggest correction we've had in quite some time, and it came with a beautiful 3-drive pattern that was just perfectly symmetrical. In other words, the AB leg was equal to the CD leg in both price and time. It took the AB leg 3 hours to form, and it took the CD leg 3 hours to form, and the exact price levels were perfect. They each were $1.50 in the AB leg and $1.50 in the CD leg. So that made a perfect symmetrical 3-drive to a top pattern, and that happened to be the top, and then it started to down. The $64 question is how much are we going to come down in crude oil if, in fact, we are going to break to a little bit lower lows. If we get below 101, in other words, we drop another $3 from here, that's going to be a reversal pattern coming from that long-term daily chart in crude oil that we've looked at several times. I'll put it up here. It's a little bit, just give me 1 second to clean it up just a tiny little bit here, because you'll be able to see the patterns clearly enough to see the ABCD patterns that have formed, and you can see that there's some type of a top, most probably finishing in this area where we are up at this 107.20 level, which was a 1.27 expansion of the move from September to November. So September, October, November, that move expanded by 1.27. So there's like 5 different price objectives up in this 106, 107 level in the crude oil. Whether that holds it or not, no one knows. But that's that's the name of the game. Nobody knows. Okay, we got to take a little break here. Wow.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks. I posted the long-term weekly chart on the crude oil showing, that we had lower tops along through here. And I just wanted to, show you that on a longer-term basis that the crude oil is still in a long-term downtrend. But that's, whether that's going to change or not, we'll have to wait and see. The next chart that I posted into for Tiger TV was the cash S&P daily. That is, we're almost approaching a double top up here. We're not very far away. We've exceeded the 786 by somewhat. We've had some, as you can imagine, some really strong gaps today because of the comments made by the Federal Reserve. And, whether that they're going to fill these gaps or not, I don't know. This long-term pattern that I've been looking at in the Dow Jones and all of these others, they certainly are still in place. The ones in Europe look far worse than the ones we have here in the United States. And if we make a new high in the Dow Jones, and that's certainly a possibility, we could get above 15,400, somewhere in that ballpark. There's a very large ABCD at that point that I don't think the market will go much beyond that. I really think what we're looking at here is very similar to what we were looking at when we were watching the bonds when they were in that 155 level, making that giant butterfly pattern around 12, 13, well, about 15 months ago. and now we've had, higher interest rates come in. And we will, we are looking at higher interest rates, folks. There's no other way to, when you look at the charts, well, just look at, look at the mortgage rates. We're already, the 30-year is, back above 4.1 now. And just a few short weeks ago, it was 3.3. So that's a very large, increase in interest over a short period of time. But that's been a 32-year bull market, and I believe that market is over. Whether it's going to be over for very long, we'll have to wait and see. But that's the overall opinion that what I have. I have never been more bearish in stocks than I have right now. And I'm wrong. I knew we were going to have the rally coming off of June the 23rd. I just didn't think it would extend past the 9th of July, where we had Combust. That was the Venus conjunct Mercury, and that's one of the larger and the more accurate of the cycles that we use in the market. But it has a 2-day orb. So today's the last day. You had the 9th, 10th, 11th. So today's the last day. We cannot be up tomorrow. If the stock market's up tomorrow, this cycle would certainly be a failure, and we could easily make new highs. And then we'll see if it will, continue on high or not. I believe the pattern is very similar to the one that we had in October of 2000, where we made a slightly higher high than we did in July. And then the market, rolled over and, of course, gave up more than 50% of its value over the ensuing 11 months. And I believe that we're in the same type of a situation with the stock market today like we were at that point. So that's all I wanted to say about the stock market. We're going to have Rich Anderson on at the break here in just a few minutes, and we're going to talk more about, the corn and soybeans and wheat and some other things that are going on in the market. And believe me, he has a really good handle on some of the volatility that's happened in these markets like gold and silver, and also in the foreign exchange markets, because he deals as part of his business. He deals with some very big names in the business that do a lot of work with him as far as trading advice and things. So. The stocks, that's all. I mean, the rally has been more than I thought, but they surprise me all the time. And I don't understand, all the things that happened with the Federal Reserve, but frankly, not many other people do either. So that doesn't bother me very much at all. The fact that I don't have to understand what's going on to try to see how to make a few bucks on this. The one thing I am really good at, folks, is short-term trading. I don't have to really worry about things as long as I can give me a 15-minute chart or half-hour chart, and I'm going to be just fine. I wanted to post into the chat room today the chart of the DAX index. This is going back over the last 6 months, and it shows this same expanding triangle that we've had. And we're going to take a little break here, and then we'll be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, boys and girls, we have our good friend Rich Anderson from Anderson Capital Management on the line. Rich, are you there?
You bet. How are you doing, Larry?
Well, haven't had much sleep in the last 20 hours, but thank God we're having such fantastic swings. I mean, we don't see this, but maybe once a year where you're going to get moves like this. In fact, I can't even remember the euro moving $8,000 in one day. I mean, that's almost unheard of.
Well, how about the crude moving 3 today?
Yeah, well, that doesn't surprise me because it's been straight up, so it's way overbought. Hey, Rich, we just had a report in the grains this morning. Can you give us a little update of what that was about?
Yeah, the big surprise was the world wheat stocks are down 9 million metric tons, and generally coming into the report, people thought maybe the world wheat stocks might be down 1 million, but they weren't looking at the U.S. stocks of wheat were down 5 million tons. So that's actually kind of friendly to the wheat, a big surprise. The corn and the beans were more of a yawn. It didn't really make too much difference. The carry out on the corn at $1,950,000, that's more than enough corn. I always look at relationships. A couple times ago when I was on the radio, I was telling you how I kind of like the spreads versus the outrights, and the Julys go off the board on Friday, and they've just been screamers against July corn against these corn. I mean, that's been one of the big plays, probably the best play in the market. And July beans versus November beans has been a big play. Now the key comes in. will we be able to replicate that with the August no beans once the Julys go off the board? And those things move around 15, 20 cents. It's like having outright positions. It's not for the faint of heart.
Yeah, and the margin is a fraction of the normal margin, too, isn't it?
The margin's a fraction, but the movement is not a fraction, and so you really have to be serious. I think you have to be a technician. I thought your call on the D's corn, I thought personally you nailed it. I don't ever use a stop that doesn't mean something technically, and so I was waiting for some kind of market action to give me the reason to buy when it went into your buy area. And I just got lucky. But the gap we had, because you nailed it. You absolutely nailed it. And the island reversal that we saw yesterday, that's a big deal. We forget that corn and beans, these are things that are actually used. It's not just numbers that fly up and down on the screens, and there's real demand out there. By the way, one of the most interesting things I've read about recently, I saw it someplace last night, I don't know where, the USDA, for the first time in 13 years, Larry, is buying sugar off the market to support the price.
Oh, the price support for sugar.
Right. And the price supports for corn and beans are so far away that, you can't even imagine. But, 2 years ago, they were that far away in the sugar, and you couldn't imagine. And then what they've done with it, this is what's interesting, they've traded it to the sugar companies for import credits, kind of on a 3-to-1 basis, so that, more than the amount of sugar that they've taken off the market, they're going to take off a whole lot more than that by taking out these import credits. I thought that I don't particularly follow sugar. I don't particularly trade sugar. I just thought that was interesting.
I haven't traded sugar in well over a couple of years. Rich, remember years ago when we traded sugar, it was trading at 3 cents a pound, and it went all the way up to 60-some cents a pound. Yeah. You remember that? Those were the old wild days.
And the beans would never get above $4, and then they did, and they went to 12.
That's for
overnight.
Sure. Rich, the price supports in sugar, I don't understand, why it would be, coming in here now, because, we're still in, we've had higher bottoms in this market since 1998, and I know we've given back half of the the gains that it made during 2010 and 2011, but it seems silly to bring in price supports at this level. It just doesn't make any sense, but the government does need to make sense.
You're talking about the government, and a lot of times in the government, it's who has the biggest lobby.
That is absolutely true. Rich, now I wanted to elaborate a little bit, because when you talk about these different months, I know our readers get a little confused and stuff, our listeners, I mean. And when you're talking about July, December, what Rich is doing, folks, he's buying the old crop corn, which is July, and he was selling December corn, which is the new crop. Those are like two different commodities, because one's already harvested in the bin, the other's just growing in the field. And because the demand for corn is so strong, July was rising rapidly, and since they were planting more corn, December was dropping. So that spread that he talked about with a margin of about $300 moved well over $2,000 in a matter of 3.5 weeks. And so you can see some of the volatility that's in these markets if you can understand, how these spread opportunities works between old crop and new crop.
It is amazing. One of the things I'm watching now are that beans are cheap relative to corn, and so I'm looking at next year. I'm looking at calendar 14 November beans and calendar 14 corn, and looking for opportunities. What you're always looking for is distortions in the market, like we've had in the crude, like we've had in the currencies, and how they will eventually come back.
Sure. Do you remember a few years ago when we had hogs about $4 a pound under cost of production, and they tripled in price?
When you went to the sale barn, like in South Dakota, if you drive to the sale barn with a trailer, you had to make sure there was a lock on it, because if there wasn't a lock on it, when you went home, there'd be a load of baby pigs in the trailer that somebody wanted to get rid of because they couldn't afford to feed them because they knew they were going to lose money.
Wow, I know that was back in the old days, and then of course the price tripled from that level. Rich, I have a question. I know you do a lot of things in crude oil. What's your feelings on the crude up in this level? We hit the 107 last night.
Well, I thought that was a screaming sell. They caught a bunch of people short. They rammed the market and the spreads. Look at the August D spread as an example, a 4-month spread. It moved $2-3 just the spread alone. But once they get the shorts out, the last shorts out, it drops like a rock. And
what about
and the other thing is, you look at calendar 4 December crude oil and calendar 5 December crude oil. Calendar 5 December crude oil barely moved on this rally in the fronts. Calendar 4 December crude moved $2, and the fronts moved 12. There's no buyers out there if there was serious demand for this oil, there would have been buyers across the strip, across all the different months as you go out into time.
Sure.
This was just a front end squeeze, and once the squeeze is over, it's over.
What about the effect of the North Sea crude oil versus the sweet Texas crude?
Well, that's I was talking to somebody today about the WTI, which is West Texas Intermediate, versus the Brent, which is the North Sea crude. That was out to $25 differential here 12, 18 months ago.
Yeah.
It got into just a little over $2 differential yesterday, and I'm asking, why did it get out to 25? And they said it was just orchestrated by the big financial firms. And what's really been happening is ever since there's been concern about the fear of tapering, the unwinding of the QE4, a lot of traders have been unwinding positions. They've been unwinding WTI Brent spreads. They've been, unwinding crack spreads, which are where you buy a barrel of oil and turn it into gas. When you crack it, when you heat it, it turns into jet fuel, heating oil, and gasoline. They've been unwinding all these spreads, and of course, when you unwind these spreads, it causes huge distortions. But to show you how little volume there is out there, a buddy of mine was doing. He had an acquisition of an oil company, and they were doing 3 contracts a day for the year. So that's only 1,000 contracts, but it was moving the market. There isn't a lot of depth out there.
Wow, 1,000 contracts. That's
1,000 contracts in oil is nothing.
Yeah,
but it was it was moving the market.
Wow, that is that's correct. It really is.
The interesting thing, there was an article in Business Week about hedge funds. This is another interesting thing. Since I think it's been 84 years or 86 years since hedge funds were allowed to advertise, and they're going to change the rules and allow hedge funds to advertise. But if you look back at 2008, so this is from a Business Week article, 5 of the hedge fund guys were called to testify in Washington. And all 5 of them have either retired or had major problems.
Oh, I can imagine. Not only that, they don't have to advertise because CNBC and Bloomberg and Financial Times and the Wall Street Journal, they give them all kinds of free advertising space anyway, because these people are basically characters of our environment on Wall Street, and the lifestyles that they lead, like Stevie Cohen and I know you know Stevie Cohen, so you know what
John
he must
Paulson.
be going through. Yeah, John Paulson and John Henry. I mean, any time that one of those fellows sneezes, the rest of the market looks at intensive care possibilities, so it's they get all kinds of free advertising.
But the idea was to protect the small investor, because you should have to be a qualified investor, which means you're making over X amount of money and have a net worth over X in order to be able to think about this. And now if they allow them to advertise, that it just will end up being bad for the small investor.
Well, the best way to protect the small investors is to get rid of Corzine. We got rid of, Bernard Madoff. Now we get rid of Corzine, and then they'll have some protection, because he did a lot of damage to our business. I mean, he really hurt a lot of people by what happened, and some of these people still haven't got their money back. And why he's out walking around, I just don't understand it. But that's neither here nor there, I guess. I mean, if Elliot Spitzer can make a comeback, I guess Corzine can make could come back too. So who knows?
Right. In general, the hedge funds the analysis of the hedge funds that they'd increased what they call alpha, increased performance over the average market performance by 2.5%. But you know who does it by about 8.5%?
No.
The United States senators, because they have no such thing as insider trading. And isn't that interesting?
Yeah, well, that's why I think people run for office, is the fact that they're able to, get away with, stuff like that. Rich, I have one other question, and then we'll let you go.
All right.
What's your feeling on the copper here? And we've had a little bit of a rally, I guess, with this last run up in the stock market. Do you think it's the beginning of something big, or is it just a snapback rally with very little potential to the upside?
Well, I prefer to think of copper as Dr. Copper, that it's the best. Simplistically, it's the best indicator of economic strength worldwide. And what it sounds like to me is that China is slowing, and that's almost indisputable at this point. Mm-hmm. So copper is bouncing off the lows of 2011. There's resistance up there at 340, something like that. I think we have to get the economic engine going again. And the problem is we've got Southern Europe where the wheels are falling off, and they keep gluing them back on, but glue doesn't hold a wheel on. China's slowing, and then the only place you've got some growth is here, and we're trying to take care of that by over-regulation.
Yeah.
So all it's doing right now, to me, is consolidating against the previous low, and I wouldn't be surprised if it eventually slips through that low if economics is as I perceive it to be, because it's a leading indicator of economics. So I just think it's a little bounce, and 325, something like that, is going to be tough resistance.
What's amazing, Rich, is the fact for the last 7 months is the biggest divergence we've ever had between the price of copper and the price of stocks. Stocks went straight up and copper went straight down. I mean, there's something wrong with this picture when you see that happening, because just about everything that's built, your housing, your computers, your telephones, all this stuff is related with electrical wiring that they use copper for, and yet the demand for copper doesn't seem to be going anywhere.
Right.
So, wow. Well, listen, thanks for joining us, my friend, and we'll have you on again right after we have another crop report in another 3 or 4 weeks, and we'll see where we stand with the grains. But right now, the long position in corn seems to be doing okay. It's already recovered most of the loss that it had after the report, so I guess that's a pretty good sign. And wheat's up strongly, like you suggested. So thanks again for joining us.
When it leaves an island reversal, when it leaves a gap like that, there's something big up. And that's just it.
They've trapped a few people. One other question before we have a break here. Have you had any indication about what happened with the euro, with the fact that it had a 600 pip move in a matter of a few hours yesterday? Was that just short covering, or?
I think that all it was they were short covering, and they decided to tweak them a little bit to make sure that the speculators didn't get too comfortable.
Okay.
And
thanks a lot, Rich.
There's a couple phone calls to a couple of central banks, and all of a sudden, whoop, I'll let you go.
All right, buddy. Okay, bye-bye.
Thanks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, I posted 2 charts in the Tiger TV here at the end. The first one was the Treasury note chart. That is a weekly chart that shows the low that we made last week at the 61% retracement was perfect. That completed that massive head and shoulders pattern that's been there for quite some time. And now we should be in a rally phase. In other words, a little bit lower interest rates, at least for the time being. But anytime we go below that low that we made in the Treasury notes of last week, we're looking at something very sinister, and I think rates could really spike if we do that. The next chart that I posted is related to the metals market, because it's the price of platinum on a weekly basis, and it's had a very strong weekly reversal this week. We've moved well over $100 an ounce in platinum, and much like gold's moved $120 an ounce, so they've moved together. But I believe that has a chance to be a major bottom here in platinum. And as you know, I am bullish gold right now, and I happen to be short because of the ABCD that we had up at the 12 95 level, but I'm looking to try to buy the gold back somewhere around the 1242 level is what my game plan is if the gold can back off, because we are overbought now in the gold. As we started the show, we showed the two big ABCD patterns that completed up at 1294. And so we're looking for about a $40 or $50 correction in gold. We got $20 to start out the day, and but it's still way too early. Anytime we get above 1,300 in the gold, I believe we're going to start to see more of a rally. Gold has the potential to rally all the way back to $1,500 without any trouble at all, folks. Because if it can make $120 in a matter of a few days, you can imagine what it could do in a few weeks. And gold is, as you know, is a very emotional metal, and people, once it starts to move either up or down, it does have a pretty strong following. The only thing that's negative about it is the fact that we have not had a lot of new players come into the market. So if we get a move here, this might just be a short covering rally of some kind, and if that's the case, then gold is going to go to much lower levels if we get below the 1170 per ounce level. But right now it's still in a short-term uptrend, and we would be looking to be a buyer on any 61% retracement of that move, which would take us somewhere around the $1,240 per ounce level in the gold. And then you would have to risk probably about $12 per ounce on the risk side of this trade, because we don't know which ones are going to work, but the good part is nobody else does either. So that's the main thing that we want to keep in mind. The big thing is going to be if we go into new high ground in the Dow Jones Industrial Average this week. We're not very far away, and if we do that, then we're going to see if this pattern that I've been looking at for so long, this 5-wave reverse pattern, is going to be in effect or it's going to fail. Frankly, if it fails, folks, I think I'm going to be I'm going to have to reevaluate that pattern, because that has so many of them across the globe. They're all going to have to fail. I mean, the Dow might make a new high, but some of these others might not be able to. So this is a real critical time, and I believe the cycle that we're in, and I still believe that Venus-Mercury combust cycle could still be in effect, because it has a 3-day orb, and it came in on the 9th, and that's it. Live every day in an attitude of gratitude, and may God bless.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now, here, right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.